Welcome to the weekly update where I will go over what happened in the market for Friday ending March 4th, and then we'll look ahead to see how things look for the week of March 7th through March 11th. And it was quite a week. We had a lot of different things happening. There are some big geopolitical concerns that are developing right now. And if you're more interested in those, especially with what's happening between Russia and Ukraine, I would really recommend that you go and watch some of my daily videos because that situation is changing so quickly. It's a very fluid situation. And one day we might think that certain things are happening only to find out that they're a little bit different than what we thought, or if not, an actual reversal. So please look at my daily video updates if you want to see more of an in-depth discussion about what's happening between Russia and Ukraine. I don't want to put that in a weekly video because some of you might watch this days after I talk about what's happening right now, and it's pretty much out of date with things changing so quickly. Okay, so let's go and look at what happened this past week. Just to give you some initial notes, it was a real roller coaster of a week. We had up days, we had down days, but all in all, when we got done, we are still range bound. Not only were we range bound for the past week, but we've been in this range now for quite some time. As far as volume, it was above average for the week. And what we're really watching, what I call fixation, is that largely the technicals are turning more negative. Now, there are some positive things that I will talk about as well, but we're starting to see more follow through weakness. It could change from here, but just let me show you the charts and I'll give you more of an idea of what I'm talking about. We're coming kind of to the tail end now of earnings season. We're dealing with inflation. We have been dealing with this, but this coming week, we have the CPI coming out, and that is the official inflation report. And what goes hand in hand with inflation are also interest rates. And then, of course, the geopolitical concerns, specifically with what's going on between Russia and Ukraine. We also have some talks going on in Vienna concerning Iran, and just all kinds of craziness that seems to be happening right now. As far as our overall trend, looking at the weekly chart, we're showing that we're in a strong trend. And based on the ADX that we look at on a weekly basis, that trend is now negative. So what are some of the notes that we can take from the past week? Oil shot up 25% for the week. We do have a lot of geopolitical concerns that I've already talked about. And then this past week, Chairman Powell from the Fed testified before both the House on, what was that, Tuesday, and then he spoke before the Senate on Wednesday, or was that Wednesday and Thursday? Needless to say, the markets kind of liked what he had to say, and some of the support that we saw came from this testimony. He tends to say the same things at both days, on both days. It's the question and answer time that can really lead to some differences, and that didn't seem to shake up the markets too much. So looking at specifically the S&P 500, which is what I address, looking at the major indexes, the Dow ended up being down 1.3% for the week. The NASDAQ was down 2.8% for the week. The S&P down 1.3%, kind of matched what the Dow did. And the Russell, now I follow the small cap index put out by S&P, but a lot of people, and for years I followed the Russell 2000, it was down 2%. So we saw a little more weakness in small caps and in the NASDAQ stocks, where we did see declines in the blue chip stocks, but they held up a little bit better. And then over on the right-hand side, we're going all the way back to the beginning of the year and where these indexes have resided. Now, if you watch my daily videos, I only go back really to the all-time high when I'm looking at this. What we can look at here are just, this is for the week. These are the 11 sectors that make up the S&P 500. And for the week, and I'm going to have to line up the colors with these blocks here, energy really outperformed. Now, if you look at some other reports of where we performed during this week, my percentages are a little bit different. This is from Monday to Friday, where some of the other gauges out there will go from Friday's close to Friday's close. So that's why my numbers might be a little bit different. We had energy, which was up 7.62%. Then we have utilities, which also had a pretty good week, up over 5%. Then with the this kind of Pepto-Bismol green here, that would be real estate, which had been suffering quite a bit lately, but it was up over 4.5% for the week. Then we have orange, which is healthcare. The purple here, which are staples, that's more of a value play. People need to have certain things, and so these stocks tend to perform better when we're in a more of a defensive type of stance. And then the light blue are the industrials, also more of a value play. Materials are this black box. Then we started to go over into the negative territory, where we have the pink, which is tech, the kind of Chernobyl green here, which is communication, discretionary, which is the dark blue, and then the lighter blue here is, where is it? Industrials. No, is that right? Yeah, I guess that's right, which is tends to be more of a value play. Then looking at the major indexes for the week, over here, the green, we have the Dow. It was down 0.82% for the week. Then we have the S&P itself, which is more what I focus on, was down a little over 1%. Dark blue is the NYSE composite. That's more of a broader range. The light blue is are the small caps. We're down a little bit more. The black is the S&P 400 mid cap stocks. And then kind of this blue area here is the NASDAQ 100, the biggest stocks that make up the NASDAQ. And in last place was the NASDAQ itself, down over 3% for the week. I just wanted to provide some kind of a graphical look at how things performed this past week. What you're seeing now is an intraday chart where each one of these bars is 10 minutes. And I go back a little over a week just to get some kind of a context. But right here on Monday, we did gap lower right at the open. We saw some initial selling, but then we rebounded only to give most of that up. Then we really started to decline. But then as we got closer to the close on Monday, we saw a bit of a rebound. Tuesday was probably the most negative day earlier in the week, and we ended up closing near the lows for that session. Wednesday saw a bit of a rebound, but then there was really no carryover into Thursday, where we saw a real choppy market. And then Friday, we gapped lower and then did see some recovery going into the close. So this would make you pretty seasick with what you saw overall. As far as sentiment, on Thursday, we have the release of the American Association for Individual Investors. They last week were more extreme negative. Well, they're a little less pessimistic this past week. Up above, you see a daily chart of the that might be a weekly chart of the S&P 500. Then we also had if you're familiar with RIDEX funds, and for a long time with the program that I teach, before ETFs became very popular, I used RIDEX mutual funds. They offer index funds, but also what we call juiced index funds, where if the S&P goes up 1%, some of these funds will go up 2%. And we also have inverse mutual funds, where if the S&P goes down 1%, the inverse funds are designed to go up anywhere from 1 to 2%. We now have ETFs that we focus on. Some people prefer mutual funds, other people prefer ETFs. And if you want to learn more about that, in the course that I have posted on my YouTube channel, I talk about the differences between the two and some of the strengths and weaknesses of each. But we take a ratio of the bearish funds and then divide it by the bullish funds, and it actually spiked up a little bit this past week. Not a real extreme reading, but with the downward movement of the indexes, it's not surprising that the bearish funds are starting to see an increase in interest. Then looking at a weekly chart of the VIX, the top chart here, up above is the S&P, the weekly chart, where here, this is a weekly chart on a closing basis of the VIX, where we saw fear really increase and kind of end the week at the high. Where down here, this is a bar chart for the week overall. So we're seeing an increase in fear. This is called the Ulcer Index, which is another fear gauge. As this goes up in value, that means there's more and more fear in the market. And for this past week, we are seeing a continuation of an increase in fear. Then I look at breadth on a weekly basis, where we were down pretty much overall. We saw a decline based on price as well as based on volume. But if we look at a longer term moving average based on price, yes, we declined, but we continue to be above the moving average. If you're looking at this based on volume, we have dropped below the moving average. Then I also look at a weekly chart of the advanced decline ratio, where when the blue line is above the red line, that is considered positive, and then vice versa. Right now, we're seeing the blue line below the red line, and both of these lines are declining, so that is more negative. And if you look up here at the top, you can see we have been declining overall just on a week in, week out basis. Then we also look at the new highs versus new lows. This is actually a little bit more positive. We're seeing this on the weekly chart as well, where we're seeing an expansion of new highs. And yeah, we're seeing an increase in new lows, but the new highs are outweighing the new lows, at least this past week. So if you look at the differential down here, we saw a little bit of an upturn, but we're still right at about the zero line. Another chart that I look at on a weekly basis is the accumulation buying when it's compared against distribution, which is selling. And overall, we're kind of flattening out right now. With the declines that we've been seeing, it's not surprising that we're seeing selling pressure see a bit of an increase. As far as our trend, this is a weekly chart of the ADX. This red line is selling pressure. The green line down at the bottom is buying power. When you compare the difference between the two, you have this dark line. And when this line is increasing, and especially when it's above 20, we are showing an increase in the trend. And because the red line is on top, that means that the trend is negative and getting stronger. Another chart that I've just introduced recently in the daily videos is called the Arun. And we kind of read this the same way we just looked at the ADX. The red line is selling pressure. And when that's at the very top, that means that sellers are in control. And that's what we saw this week. The green line, which had been for most of 2020 and into 2021, the buyers had been in control, but we're seeing a decline in buying power. And then down below, we take a difference between the two, and that gives us the oscillator. And when it's below zero, that is negative, and we saw a bit of a decline in this, which means that selling pressure is increasing. Another thing that we look at is called the mass index. This is a weekly chart where we're waiting for the second signal to be generated. When we go above 27, that is signal number one. When this comes back down to this dotted red line at 26.5, that is signal number two. And a lot of times that will signal some kind of a change in trend. We don't really know if it's going to be up or down. We use other tools to tell us that, but it just is signaling that a change is occurring or could be occurring. And if you look back in the past, you can see where this often signaled some kind of a change. Looking at our longer term charts, and these are all weekly charts that I have here, we have the weekly pivot levels. When we're above the pivot level, that is considered positive. When we're below the pivot level, that is considered negative. And then if we go up, we have resistance levels that stay the same for the entire week. If we go down, we have support levels that also don't change throughout the whole week. Well, right now we're right around the pivot level. And what this is telling me, because we're seeing kind of the same thing on the daily charts, is when we're right at this midpoint, that means there's real indecisiveness. The market could go either way. Well, with the downtrend that we saw over this past week, we are below the pivot level, so that is slightly negative. If we see a lot of buying come back in and we get above the pivot level, that would be considered more positive. Then I have a weekly chart of the S&P 500 with a 50-period moving average. There are 52 weeks in a year, so I just go ahead and plot a 50-period moving average. This is actually a little bit more positive. You could say it's negative because we're below the moving average, but the red line itself has not really started to roll over yet. So half full, half empty, whichever one you decide to look at. Here, I also have two moving averages, a 13-period moving average. I could have dropped that to 12 because there's 12 months in a year, but I just go with a 13 and a 50 here just to give us some idea of the shorter term trend versus the longer term trend. And we're down here at the lower moving average. We are seeing the shorter term moving average rolling over, but we have not seen a cross as of yet. So this is still positive, but weakening. Then another thing that I look at is called the bullish percent index. And these are either buy or sell signals according to point and figure charts. When this is going up, that means we're seeing a lot of buy signals. When this is going down, that means that we are seeing sell signals. After last week, we were getting to an extreme negative reading. Even with the action this week, we're seeing some other stocks, more value stocks, start to come in and see some strength. They're not as big as the big boys like the FANG stocks, but this actually increased over the week. So that is somewhat positive and coming off kind of an extreme negative reading. Where you can see a comparison here, this was the whole COVID plunge. Everything went down, down, down. We went below this green line. Well, then as we went back up, we saw us go above the red line. Then another oscillator that I look at is called the Chaikin oscillator, and this is coming off of an extreme negative reading. The last time we were at this level was during the COVID plunge. So you can say here that, again, you can read positive or negative things into this. When we came down to this level earlier in 2020, then we came back up, but now we are setting a lower low. But this tends to be more in extreme negative territory. For the week, though, we are showing a bit of improvement according to this indicator. And this is just a longer term view. Yes, we could drop lower, and we have gone lower before, but this one pink line right here is also considered to be an extreme reading, and we are seeing some improvement out of that. Chaikin money flow. I don't know whether to trust this indicator or not. Sometimes it seems to be very helpful. Other times it goes in the opposite direction of where you think it would go. But we have seen a decline. After last week, we were positive. Well, with this week's decline, we've actually dropped negative, and it's a little hard to see, but that is now red because it's below zero. Another indicator is called the force index. When we're above the zero line, that is green. Well, when we're below this level, that is red, and it did decline slightly this past week. We also look at a weekly chart of the McClellan oscillator. When we're above zero and going higher, that is positive. When we're below zero and going lower, that's negative. Well, we're slightly below zero, which is negative, but we were pretty flat on the week. That feeds into another indicator called the summation index. This top part shows a decline, and that's based on price. That's negative, and we still have more room to fall according to this, but it's a little bit more positive when we calculate things based on volume. Yeah, it's negative, but it turned up slightly. And what I've seen over the years is sometimes when we see a turn up in volume first, that can mean a turn up in price afterwards, which is kind of interesting to me, but I've seen this. I have a whole slug of momentum oscillators that I look at here. I don't put a lot of stock, pardon the pun, in these oscillators because you can see it was showing a real negative divergence. We were just screaming higher with the S&P. Well, we're seeing negative divergences. And as I try to explain multiple times, it can't help but show a negative divergence because of the way these indicators are calculated. Somebody could look at this and go, oh yeah, man, we're just gonna go into the toilet because we're seeing these turn down much more drastic than we are seeing price. That could be true, but as these prices go higher and higher, that means the calculations are with higher values. And so these indicators can't help but decline. So I don't put a lot of weight into this. I still look at them, but they're not what I use to make a lot of decisions. Another indicator is called a PMO, price momentum oscillator, and that's back here in one of these right here. It can't help but show a decline. But then we break it down based on price and based on volume. We are seeing some weakness because we're below zero on both of these charts. Another PMO study that we look at are those that are giving rising signals. They are starting to trail off for the week. But if you look at the number of buy signals, this could be showing some internal strength in the market, as other stocks that had not been participating are starting to show some strength. But when we look at those PMOs inside the S&P that are even above zero, we are seeing flat to a declining trend with that reading. I also show a weekly chart of the RSI. When we're above 50, that's positive. When we're below 50, that's negative. And we did decline slightly this past week. This is a longer term indicator that we look at called Special K, and it doesn't change all that much. It has been positive going back to 2012, as far back as this chart goes. And yeah, it's flattening out and could even be starting to roll over, but it is still far away from the moving average that I have plotted here. Another one is called the Swinlin short-term oscillator. All I do is I switch that over to a weekly chart. This past week, it's showing a little bit of strength based on price as well as based on volume. Another chart is the Williams %R. This tends to be really touchy on a daily chart. Well, it's still touchy on a weekly chart. A few weeks ago, we were showing an extreme negative reading. We've bounced up out of that, but this past week did see a decline. Another chart that kind of goes hand in hand with this is called the Stochc RSI. It's trying to take a stochastics and an RSI and put them together. We have been pegged negative for quite some time. So this is actually more negative on the weekly chart. Another chart that I look at is called the Vortex, where if the red line is going up, that means sellers are in control. If the green line is going up, that means buyers are in control. Well, what we're seeing right now is that sellers are in control, but it flattened out. We did see a little bit of an improvement in the buying power, but it is still decidedly negative. Another chart is the ultimate oscillator. When it's above 50 and rising, that's positive. Below 50 and declining, negative. Well, we're still below 50, but this is showing some improvement. And then I have another thing called the money flow index. And this is coming off an extreme negative reading and did show a bit of an improvement. Some of our different charts that we look at, this is a Heiken Ashi based on a weekly chart. We are showing overall negativity with the dark candles. We're also seeing some negativity with the Kegi chart based on a weekly period. When it's black, that's positive. When it's red and declining, that's negative. Well, even though we're negative, we were pretty much flat for the period. Renko, another way of looking at charts, we have a red bar right here, and that is more negative. So we're really getting more of a mixed picture overall. This is equivolume as well. And then down below, this is a 1 week period right here where this is more positive, even though we had a down bar. And with the 14 period, going back 14 weeks, it is showing a bit of an improvement, but we are still below zero. Point and figure did not generate a signal, but with the upward movement that we saw this past week, we had some green X's. Zeros are negative, X's are positive, and green means that they were drawn just over this past week, but it's not really generating a signal overall. It just suggests that we're more range bound. The 3-line break is more negative. We've been declining for the past few weeks. Different trading systems that we look at, a little shorter term trading system is called the Elder system. When the bars are green, that's positive. When they're blue, that's neutral. And when they're red, that is negative. Well, we just plotted a red bar for this past week. Another system is called the SAR, stop and reversal. When the dots are below, that's positive. When the dots are above, that is negative. Well, for the last number of weeks, pretty much since we hit the all-time high in early January, this chart has been more negative. Some of the broad market things that we look at, here's the S&P, a weekly chart where it's really pronounced on the daily chart where we are in a range. The mid caps also have been going sideways, and we're kind of in the midpoint of this range right now. Small caps have also been range bound for quite some time, and we're kind of at the lower part of this overall range. You might be able to say that we're getting back into the range itself, more in the midpoint. We also look at an ETF of not only US stocks, but international stocks. This is showing a decline overall, and the blue moving average is starting to come down and is in danger of crossing over the red moving average. As far as the mid caps, we have been range bound, and we saw a death cross recently on the longer term chart. Small caps, the same thing. We've seen a death cross, and we are more range bound, but we're getting into the lower part of the range. Industrials, we're in danger of the Dow actually crossing over negative, and we had a down week. We have been range bound, but we're starting to possibly break down below that range right now. NASDAQ 100, more weakness, seeing a death cross, seeing the bars moving down. NASDAQ 100, the 100 biggest stocks that make up the NASDAQ, we're starting to see a potential cross here, a death cross, and we are below both moving averages. NYSE, it has been more range bound on the daily charts, and it's now near the lower end of this range on the weekly chart, but we're in danger of seeing these lines cross, and that would be a death cross. Wilshire, also a broad index of the market, kind of the same thing. We haven't been in as much of a range as for as long, but we're seeing things start to break down. The FANG stocks, this is where we're seeing some weakness. Tech, so back here, 2020, 2021, we saw real nice leadership from the really big tech companies. Well, they have broken below the moving average, and a few weeks back, we saw a death cross on the longer term charts. ARC, which has just been having a really hard time, it was down over 11% for the week, and we crossed quite a while ago but it is in a pretty solid downtrend. One thing that I did want to show is the software, one of the software indexes that I look at. Yeah, we have seen a decline, but we are currently at support. And we've been at this support before, only to bounce up off of that. One of the negative things is we've been camped out at this support for quite a while. Some broad market measurements that we look at. Here's the CRB. This is what I use to look at inflation, and it's just been shooting up, especially since the low back in 2020 during the COVID plunge. Gold is potentially starting to break out. It's looking a lot more healthy, both on the daily chart and here on the weekly chart, but we still have a lot of work to do to get back to the high that was set back in 2020. Silver is also potentially trying to break out, but we've been in this area before. And we want to see a lot more follow through with silver for this blue line to cross back above the red line. Then oil, which boom, to the moon. Here we go. This is a weekly bar chart. We ended up closing right near the high at the 115 level. The dollar has been doing really well. Gold and dollar are kind of both going up together, which is kind of strange. They have a tendency to move in opposite directions of each other. But the dollar has seen some real solid strength based on the weekly chart, and it's looking pretty strong on the daily chart as well. Then I look at some other markets that compare with each other to kind of get a different perspective. Stocks versus bonds. As these lines have been going up, that means that stocks have been outperforming bonds. When this line is going down, that means that bonds are outperforming stocks. Well, we're right at support right now. We have seen some weakness in stocks, but it doesn't really show that this is rolling over yet. One thing to be aware of is this is a monthly chart, not a weekly chart. So this could redraw many times. We're just at the beginning of March. So by the time this becomes a full-blown reading here, it could change many times. Then I have an intermarket analysis chart, and this is a daily chart, and I just go back 1 year just to show how oil has just been skyrocketing up. The S&P 500 has been declining since the first of the year. Gold has been seeing some strength. The dollar has been holding up with a slight upward movement, where bonds based on price, they had a good week this last week, but they have been underperforming overall. Another thing to look at is gold versus the US dollar. Well, with them both going up, we really haven't seen much of a change. We see a lot of blip up here. If gold is really going to start to outperform and the dollar is really going to show weakness, we would see this first come above this red line and then eventually break above the blue line, which are longer term trend lines. Looking at gold versus the S&P, it's very pronounced on the daily chart, while we're seeing a potential breakout with gold on the weekly chart as well. And if this continues, we will eventually see this blue line cross above the red line. Looking at value versus growth, when this line is going up, that means growth is in control. When we're down below this red line and it is declining, that means value is in control. This is what played out in early 2021, only to see growth come back in and take over. Well, ever since the high we set earlier in the year, growth has really been underperforming value. And if you were to take this chart and flip it upside down, it would show that growth could potentially be breaking out, but we have some other levels where we were at before that could provide resistance. Then looking at the NASDAQ 100 versus the S&P 500, it just shows that the 100 biggest companies in the NASDAQ have been really underperforming the S&P. So even though we're seeing weakness in the S&P, we're seeing even greater weakness in the NASDAQ 100. Here we have the top 100 stocks in the S&P. This is called the S&P 100. And then I'm measuring this against the S&P 500. And for the last few weeks, we're seeing the big stocks really underperform, the rest of the S&P 500. And we've been seeing this on the daily chart as well. So what are we looking for? The long-term bias does remain positive, and I'm mainly focusing on the moving averages there. But we're starting to see some real weakness longer term. What's coming out over the next week as far as major economic reports? On Thursday, we have the biggie, that's CPI. That's when we get the inflation rate. And that could really send the markets gyrating one way or the other. Then on Friday, we have consumer sentiment. And I have a chart that will go with that I'll post in next week's video. We do have a lot of geopolitical developments. Again, if you want to hear more about that, go to some of my daily videos. And that mainly talks about Russia, Ukraine. And there's also some Iranian talks that are going on in Vienna right now. And that's changing almost on a daily basis. So thank you very much. I hope you found this helpful. I hope that you might go back and watch this a few times and see, are we more negative? Are we more positive? I think that yes, longer term, we're still okay, but we're seeing a lot of weakness that's creeping through. And so when we take all of these charts together, we're looking at more of a mixed picture right now. So I hope you have a very wonderful, safe, and peaceful week. And I will talk to you in next week's weekly video.